Investors and traders, welcome to the channel Market Chart Pattern. Today is 4th of February 2024. I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key technology stocks that we follow for the US market. And this video is for educational purposes only. It is not a financial advice. With that, we'll begin to take a look at the technology sector first, and then we'll take a look at the key individual stocks. So we have a lot to talk about, quite a lot of these stocks and ETFs to track. So with that, we'll just start. So I will be mainly focusing on the weekly charts for this because this is also the end of the week. It's a weekend review, and these are longer term charts, so this gives us a longer term perspective where these markets are. With that, we'll begin to take a look at the XLK, which is the Spider Technology ETF, and this is the weekly chart. So here what we can see is we have a number of these ABCD cycles or patterns marked around here, and we have the shorter terms as well, and we have the longer one as well. So let's start with the longer one, this ABCD, the black one, and that completes around 222. There are several smaller ones which complete around the 216, 215, 217 region thereabouts. So all of these cycles, including the bigger cycle, are coming together fairly close, and whenever we have a confluence of two or more patterns or ratios coming together, it is something that we really like to pay attention to. And with this, where the market is at the moment, it looks like maybe there is still some more space to the upside. And a lot of these technology stocks, especially the ones which are affiliated with artificial intelligence or are really the how shall I say, the foundation for the artificial intelligence, such as stocks like NVDA, they are really pushing these markets higher, the technology sector. And also we have had fantastic earnings come out, price action in Meta, for example, which is also affiliated with artificial intelligence, because they hold so much data and they can do so much data, use that data for different sort of purposes, hopefully for good purpose. Okay, so this is what we are looking at, and it does look like there is more possibility for the price to rise higher. 216 is the shorter term to 222. This is what we are looking at, and the current price is above 194, which is 1.27, which is another reason to actually think about that. Actually, there is more space to the upside. The next one we'll take a look at is the QQQ. So this one is the Invesco Trust Series 1. And here I have not highlighted all the cycles, just the way I've done it for the XLK. But this one, again, what we can see is pretty strong week last week. And we have this smaller ABCD, which takes us to around 445 and 450 is the 1.272 expansion of this swing. So just like the XLK, the QQQ, there is more upside in my opinion, because the market, look, the market has cleared. Let me actually try to point this structural high, which was around here, which could have been a resistance, and it was for a couple of weeks, and then the market was able to take this out with a lot of force. And here for a couple of weeks the market has been trading above that. That gives me a reason to believe actually we are going to actually go and complete this cycle ABCD, and then of course we have the 450, which is 1.272 expansion. With that, we'll take a look at the weekly chart of Meta, formerly Facebook, and it's a very interesting chart. This is the weekly chart of Meta, and here what you see is actually, let me try to zoom in out like this. Here, this big ABCD is basically one-to-one price projection from the IPO lows back in 2012 to the high, which was achieved in the August of 2021, to the lows of 2022. So actually the highs were the retracement from the highs to the lows in 2021 Yeah, excuse me, it is 31st of October 2022. The lows was exactly 78.6% Fibonacci retracement. So if you don't believe in these ratios, some of these ratios do the magic, right? It has actually completed this ABCD pattern, and price has also exceeded this. So this is really interesting. Now, whether it is a completed pattern or whether the market is so bullish that because of whatever is going on in the artificial intelligence world, that it is actually not the start of a move, but rather an extension of the move, and we could see higher prices. That is also certainly possible. I just want to bring to your attention, we do have one-to-one price projection completed, and we have the 1.272 expansion coming in at 465. The stock closed above that, and the 1.618 expansion comes at 567. So roughly we can say $570 per share. And it's possible that this ABCD could actually be extending, and we could in fact see 570. That remains a possibility. Now, please do tell me in the comments, what do you think, whether it is a start of a move or whether it's an ending move. But it's really interesting to see, and this kind of price action is just not it's just not limited to Meta. We have also seen this with the NVDA, because NVDA is of course really the GPUs are being used for all those computations needed for artificial intelligence work, which is quite heavily computational intensive work. And I remember Mark Zuckerberg in an interview, I saw it somewhere on YouTube, mentioning that I don't know how many GPUs he bought from NVIDIA. So of course we are seeing the kind of moves which we have seen in NVIDIA. Now we are beginning to see in Meta as well, because of the artificial intelligence revolution. So here the NVIDIA stock is above the 1.618 extension of this ABCD leg. So the CD leg is 1.618 of AB. In fact, it has exceeded that. So and now it's really in an uncharted territory from my perspective, because normally we like to take a look at 1.618 extension as the kind of the final, well, not shouldn't say final, is kind of the a really extended move. And this market has just been going parabolic here. So just watching this one, don't have any further target for the moment, but certainly it's pretty strong. With that, we'll take a look at the Tesla. So this is the weekly chart of Tesla. So this stock has been under a fair amount of pressure, and in the news you would have seen the news that came out with regards to some lawsuit against the co-founder Elon Musk, about his payout package, which the board had approved. I don't know how many billions it was. I'm not really sure into technical details of what that is, so please Google it yourself and try to understand that. We'll just take a look at this stock from a technical perspective and what the price action is doing and what the patterns are telling us. So the last video which we had done, in which we reviewed Tesla, we were watching for a very key level, which was this 1.618, excuse me, the 61.8% Fibonacci retracement is more visible on the daily chart. So let me bring the daily chart up, and here we go. This level exactly around 80. This was basically 61.8% retracement, and also we had a 1.272 expansion of this leg coming nearby. So whenever we have a confluence of two ratios or patterns coming together, it's something we like to pay attention to. So far the price action has been fairly muted around here, and moving on to the weekly chart. Back to the weekly chart, here you can see I've written 61.8% retrace and plus 1.272 expansion, and we have seen an inside bar. So the price has so far rejected lower prices and formed an inside bar, and now we'll have to wait and see how the price will move over the course of next couple of weeks. But we have a pretty strong support between where the market actually the low of around 180 to 175, and there's a chance that that might hold the price However, you see this orange line here, that's an ABCD pattern, which in fact goes a little bit lower to around $155 per share level, and because of that, anywhere between 175 to 155 is the kind of region where the market would go, and that would mean it's going to go and probe these lows from 24th of April 2023. However, the other thing is that if this low is held, so that this is now assuming the low is held, uh, we have to look at now the pattern formation, which will be the one-to-one price projection ABCD, and let's see where that will take us to. That's assuming, let's say, here the big F is that this is A, B, and this is the C leg, and assuming this low is held, it will again take us to around $350 per share level, and this is what we had been watching, because that's also the 78.6% Fibonacci retracement. If it moves to 155, for example, we still get ballpark same figures. So this is what we are watching. Below 155, in my opinion, is going to go and retest these lows of 100 that took place on the 3rd of Jan 2023. And if you watch our old videos, you will see this is something we were actually pointing out to, because a number of things were happening. And in fact, 105, you can see in the comments, 105 per share likely to be a good support level, and so far it has held for quite a while. Okay, so with that, we'll move to Microsoft, another stock which is a fantastic company. It's, I believe, the world's biggest company at the moment. Not sure about the world, but it's about $3 trillion in value now. And here, this one is also affiliated with a lot of work which is going on in the artificial intelligence. They are actually, I believe, a partner in the OpenAI. And here, from a price action perspective, the price remains above $400 per share level, which was the shorter term target. We were looking for 1.618 expansion. Now it seems to be moving into this $430 per share region, which is the 1.618 expansion. And if this market begins to move higher from there, then of course the chances are it's actually doing a one-to-one price projection ABCD and moving a fair amount higher, but we'll have to wait and see. You can see the amount of bullish candles on weekly basis. So this is the 8th of Jan. This is the start of the new year. 1, 2, 3, 4 for 4 consecutive weeks we are seeing bullish weekly candles. So this shows the strength in the stock. Now with that, we'll take a look at the Apple stock. So this is the weekly chart of Apple. Here you can see a slightly different price action here. Maybe you can even argue that Apple stock has some distribution taking place, because look, similar kind of price action around here. This $200 per share level is a fair amount of resistance, because we have the 1.272 expansion, we had the 1.618 extension, and the shorter cycles I've not even counted those. And here we have a potential double top formation here. Now the price was held from the 61.8% Fibonacci retracement, although on the daily chart we were thinking it could perhaps come a little bit lower. That chance still remains, because we could have a ABCD to the downside. Let me actually show you what I mean. Here we go. And we'll just project it from here, so a little bit lower to around 175, 160. So between 61.8% Fibonacci retracement and 78.6% Fibonacci retracement, which I haven't drawn here. So it looks like the market is just sideways, it's just not going anywhere. Above the $200 mark, we have the 218 as the 1.618 expansion shorter term target, but this market must hold these levels to the downside. Going below this low of 165, taking this low out, will set up a different kind of a pattern. So here, just watching this one, you can see compared to some other stocks, just like for example Microsoft, the price action in Apple is fairly different. Now we'll take a look at ROBLOX. So this is another stock which is affiliated with Metaverse. So that's the theme that we were following. And here, this stock, you can see on the weekly basis, This stock came to the market, to the public markets, through a SPAC, and here we have seen after the IPO a big decline, and for quite a while, quite a long while, you can see it's just coiling like a spring. And in my opinion, there's a fair amount of accumulation going on around here because it's a big trading range as well. The market begins to move towards the top of the range, then it goes to the bottom of the range. Not exactly this bottom around here, but this bottom pretty much here, because it was a fairly sharp move here, and then it formed a higher low. Anyone who's familiar with the Wyckoff work, I believe it's the kind of classic accumulation pattern which is taking place. And with that, what is also possible is that the market is finding support from the 61.8%, the 38.2% Fibonacci retracement of this swing, and 38.2 retracement. For trending moves, it's a pretty good retracement, and whenever the market pulls back to a 38.2% Fibonacci retracement and bounces off from there out to the upside or the downside, depending upon the support or resistance, is usually a move with the trend, and could be a pretty strong move. So as long as this is held, the chances are that we are looking at this more ABCD, and the price moving to about $56 to $60, and even 38.2% Fibonacci retracement, which is this $67 per share level. I think personally that this stock is actually moving there. It has the potential to move there, but we'll have to wait and see, because there is a fair amount of resistance around the $53.90, $54 per share level coming from this top of the range. And now I think the stock also has earnings come out. When are the earnings coming out? They are, I believe, next week. We'll just go to the daily chart and have a look. Okay, Wednesday next week is when we have the earnings come out. So of course there is expected to be a fair amount of price action taking place. So keep an eye on this one in terms of its earnings. Okay, so we'll take another take a look at another stock which is affiliated with artificial intelligence as well. So this one is Symbiotic. This is the stock that we had been following for quite some time, and in fact this retracement, let me actually draw it for you on the weekly chart. Here we go. Was an exact 61.8% Fibonacci retracement. This is where we began to take a look at that. So this stock is affiliated with in artificial intelligence and robotics, so a little bit slightly different, not just manipulating the data, but actually making use of the data with the hardware. So very interesting one. Robotics, of course, there's a lot of demand for robotics work in warehousing and manufacturing, a lot of automation that can take place. Unfortunately, it also means some of the manual jobs also get replaced, but they just get repurposed, and that's just my view on it. So here again we had a 61.8% Fibonacci retracement being held. And if we were to draw a trend line, and this is not going to be a perfect trend line, it'll just be overshooting like this, right? So we have a double bottom here and an overshooting trend line in 61.8% Fibonacci retracement, and we have this bear flag formation. This stock seems to be breaking out of it, and if it breaks out, it could be pretty strong breakout. And what it means is that we have the shorter term ABCD going to about $70 per share level, and above that the bigger one could actually take it to $85 per share level. All of this depends on this bottom around $40 per share to be held, and if it is able to break out of this flag formation to the upside, these are the kind of price targets that we could be looking for. So keep an eye on this stock, very interesting stock. Now let's take a look at Netflix. So this is a weekly chart of Netflix. Okay, so there we go. It is approaching the 78.6% Fibonacci retracement. I'm not as bullish on this stock. I think fair amount of bullishness, the fair amount of it's already built into the price now. A lot of what was gonna, how do you say that? There's a lot of news in the price already, and this is why it's also being reflected in the share price as well, because it's just ABCD pattern here, and above that the 78.6% Fibonacci retracement. For it to do something, the kind of things that we have seen, kind of explosive moves, NVDA or Meta, it really needs to get above the 78.6% Fibonacci retracement, and then we could see that maybe $700 per share could be the target. But it looks like for now, 585, which is 78.6% Fibonacci retracement. That's what we are watching, whether the stock is able to take that out. Then we'll take a look at Z-scaler. So the Z-scaler is above. This is what we were watching when we did the last review. We were watching this level because we had the 50% retracement and 1.272 expansion coming here. The market has been stronger for 2 weeks. It's been above that. Now the chances are it's going and aiming at $265 per share level, because that's the 1.618 expansion and also the 61.8% Fibonacci retracement. If this stock is able to move above that convincingly, then look at this really nice kind of cup formation, fair amount of accumulation coming out. It broke out of this. It's a possibility it can go and form a handle formation, the kind of cup and handle. But moving above 265 the stock might actually be setting up for a bigger ABCD, which could take the stock much higher, above 400, taking out these highs. So we are watching this one. Let's also take a look at Google, Alphabet. Okay, so weekly chart of Alphabet, and here the market is actually finding resistance from this top around here. We have seen something like this before here as well. So here, interesting to watch this, how the next couple of weeks will pan out. Because otherwise there's a possibility it's also doing a one-to-one price projection ABCD higher, which could take you to 180 roughly, or it could just be finding resistance from and forming a massive double top formation as well. So we'll have to wait and see. Then finally, last but not least, Amazon. So the Amazon is the king of e-commerce, and here what we are looking at is the weekly chart. This stock really likes to do double bottoms, double tops, and after finding support from the 38.2% Fibonacci retracement, looks like it's going for its highs around 180, 85, maybe these highs here. And if it is able to take that out, then maybe it's doing also a one-to-one, or at least the expansion of 1.27 could take it to $216, $217 per share level. So with that, the last one I will take a look at is Shopify, because it's also related to e-commerce. So this is the weekly chart of Shopify. So Shopify finally reached our target of 38.2% Fibonacci retracement. Here we go. Okay, it's already drawn. System slow. So here it's just going sideways. But the chances are roughly around $100 per share level is also possible for the stock. But if you look at Amazon's price action, because it also has the AWS component, this stock is fairly lagging behind, because it's pure play on e-commerce. It's just a shopping cart, web hosting, and they have several partners that they work with. Interesting stock. We will definitely keeping an eye on this, but the chances are that the 38.2% Fibonacci retracement could be a resistance level from where it could pull back, and that pullback will be pretty interesting. Maybe it just pulls back to 38.2% retracement, comes around 69. So bottom of this range around here, This remains a possibility. So this is what we are watching. Apologies, a longer video, but I think it was due because we covered a lot of tech stocks which we were not able to cover during the past week. I'll try to do more daily updates for this. My focus has been more on the overall stock market, as you have seen over the past of couple of weeks or few weeks. So I'll try to also do these on a daily basis. That we will just keep more up to date rather than having to take a look at these on weekly basis. But I hope you'll find this of educational value because we covered a lot of stocks. And if you did, then please think about subscribing to the channel. And if you found this video of value to you, then give it a thumbs up. And if you do subscribe, please do hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So thank you very much for watching the video. Have a fantastic weekend. Good luck and good trading, and speak to you guys soon.